Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about what we might expect from Ethereum as it goes into the merge in the coming couple weeks. If you like the content, remember to subscribe to the channel. Give the video a like and follow us on Twitter for a lot of updates about our indicators and more over there. So you're probably aware, if you've been following the crypto markets, that Ethereum, being the second largest cryptocurrency, has a lot of narrative surrounding it right now. And that narrative has been all about the merge, this moment where it's going to transition from being a proof of work network to a proof of stake network. And this has been a long time coming. It's something that Ethereum has been working towards for a very long time. And finally now, it's believed that between September 10th and 20th, somewhere in that time kind of window, this merge will happen where this transition will take place. And I want to talk about this a bit more because I've been hearing just tons of different narratives out there about what price of Ethereum is going to do going into this event. So switching over here to the ETH price chart, this is on the daily time frame. ETH, right around when that announcement happened that the merge was going to be happening, this month, price just went on a rally. Really ETH kind of led in no small part the rally that we saw really coming into, July going on, that kind of summer rally. ETH was one of the big movers leading the crypto space. Obviously other assets ran as well, but ETH was one of the big ones, especially given how large of a market cap it is. And, the merge narrative is really what's been driving this. At least that's what a lot of people think. But I think the question that's more interesting to ask now is, now that we're close, within a couple weeks of the merge actually happening, what is price going to do from here? There are some people who are arguing that the merge is not priced in yet, that, the change in tokenomics, basically ETH issuance, is going to go way down after the merge happens. That's going to set off this big supply shock and that things are just going to go to the moon. Whereas there are other people who are saying that this is just going to be a sell the news type of event, or some people saying that, this was already the peak of Ethereum at 2K and it's going to be down only from here, and in fact expecting possibly even lower lows to follow after that. So what I want to do is talk about some different factors that I think are going to matter and influence what ETH is going to be able to do from here. So I want to start off by talking about some of our risk models and then come back and wrap it up with some more macro considerations. So let's go ahead, switch over to some of our risk indicators here on the channel. So I'm showing you here our long-term upside downside potential indicator for Ethereum, or UDPI. So if you're not familiar, this is a risk model. So basically high levels are high risk, low levels low risk. And the UDPI reliably does a really good job of quantifying risk in an asset. You can just see that when you look at this chart, like acquisition zone, distribution zones, acquisition zones, distribution zones. Anyone who was in the markets during these times would have been very happy to be following kind of the UDPI's advice, or what it was thinking in terms of times to be acquiring or distributing ETH. And what's also useful about these indicators then, because of this kind of track record, is it gives us an idea of how overextended is the market, how risky is it, how likely is downside to be coming, or at very least kind of the upside getting exhausted versus, the downside getting exhausted. And we just came off, we can see here, a pretty low risk level reading for ETH. And we actually see this if I switch over to the raw levels of the UDPI here. We had been down below -4, kind of a point that's only really ever been visited by ETH in these kind of bottoming out points. Here, 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 and here, all historically great times to be acquiring ETH. We were just back down there just now, and we've rallied off of it since. But one of the things that you'll note is if you just look at how many risk levels, basically how many UDPI levels that the long-term UDPI has traveled in this time, we're all the way back above zero. And in fact, the last time we were there was during this little kind of relief rally back in March of 2020. And then, obviously we had a big drop down from there. And so really what we can look at this as being is that, this was a low risk period. It was identified as such, realized a bunch of upside, but the model thinks that, the floor might be expanding, that there's more and more room to the downside that might be plausible. And so basically ETH has realized upside potential, but also the downside potential has been growing as well, potentially in this run. And what that could mean is that there's now quite a bit of room to the downside to follow. So if we're thinking about those narratives about where ETH might go from here, the people are arguing that this is going to be a sell the news type of event and lower lows are going to come. The UDPI would not be inconsistent with that. The UDPI thinks that that could certainly happen. That's something it's basically pricing in that possibility right now. Now, obviously, though, we're not all the way up here, right? We're not up at these highest levels. So the people who think that ETH is going to have further to go from here, this isn't, UDPI isn't totally inconsistent with that either. But when I kind of think about this, I don't think that ETH is going to operate in a vacuum, even with this really kind of bullish catalyst that it's potentially dealing with. I don't think it's operating in a vacuum. I think macro considerations are going to matter. And I think that caps the upside that ETH might be able to actually realize in this current moment, given that we're still in a macro bear market and certainly a crypto bear market. We haven't really seen signs or definitive signs by any means that that's over. And so from that perspective, then, finding at least local top at about the same point we found it in March on the long-term UDPI makes total sense. And so kind of my reading of this, or my kind of base case, is I personally fall more on the side of this being a sell the news type event rather than ETH just running like crazy from here. So I would actually expect that it's very possible 2K is the local top, even with the merge about to happen, unless things really start to reverse where ETH would maybe put in another kind of local high. I think it's very plausible that 2K was that top, and we're going to see some down from here. Now, I don't know if we have to see new lows, right? I think that'll depend a bit more on other factors. But certainly going back and retesting these lower levels seems reasonable. And I think what this model is doing, what the long-term UDPI is doing, is, as I mentioned, pricing in the possibility of quite a bit more downside or even a possible capitulation off of here. So kind of this hype run in the middle of a bear market that could then lead into more downside. And so obviously if the merge happened in a bull market, I think my outlook would be very different. If we were in kind of more of this type of environment, then I'll expect this to send ETH really skyrocketing and having these risk levels be in play. Because we're in much more of a bearish situation right now, I think these levels are probably more in play here. Now, of course, I could be wrong. This could age terribly, and it could be that we are hitting a turning point and things are going to get more bullish, in which case that would be, this would be wrong. But my base case is that we're in a bear market, we're still in a bear market, and more likely than not, I think the downside that this model is pricing in is more within reach right now than the upside. So that's just my looking at that. And another thing that makes me say that is if we flip over here to the short-term UDPI, this cares about moves that play out over days to weeks, somewhat shorter in its time horizon that it cares about. One of the things that we can notice is look at how overextended the short-term UDPI got during this run up here coming out of these lows. We got all the way above 2, pushing up above 2.5. The last time we got anywhere close to that was, again, March of this year when we had this relief rally that then led into all this downside. And so what this tells me is that ETH got quite an overextended in this run up here, and that it basically had exhausted a lot of its short-term upside potential, especially what was probably more feasible in a bear market, especially running all the way from below -3 up to 2.5. That's a huge move in a very short amount of time on the short-term UDPI. So seeing it cool off from here and price come down along with it would make total sense. And in fact, I might expect the short-term UDPI to fall back down to kind of these levels again, in these kind of levels, before it might kind of find its local bottom. So it still has more short-term downside potential to realize, and I actually expect that to happen before we could see some upside. And if we think about these two in together, what we might expect then is that there's a lot of longer-term downside potential that could happen. So we might have some more short-term to realize. Maybe there's a bounce, and then maybe there's more downside. You'll expect this to maybe kind of oscillate more as there's short-term downside potential that's realized and gets exhausted. Then you start realizing some short-term upside, or at the very least, more realistic downside potential starts getting priced in, and then you end up doing it. Price rarely moves in a straight line. I would expect maybe some choppiness kind of to the downside, but still lower lows, lower highs. And again, this is just my base case. This is just what I'm thinking, given that we're in a bear market and what we've seen, ETH do coming off of these levels in the past. Now, again, if we are going into a more bullish footing, that could be wrong. But, we've seen this kind of thing before. Look at this relief rally we had back in 2018, really chewing up a lot of the short-term upside potential and then just price falling off a cliff. We're a little bit more advanced into the bear market now than we were back then, most likely. But still, I think down, my base case is, if we're going to apply probabilities here, I think downside is more probable than upside. But again, it's all probabilistic. None of that is, of course, guaranteed. Now, one final thing that also leads me to be, more short-term bearish on ETH here and to expect a more sell the news type of scenario to play out. We flip over here to the momentum bias indicator, or MBI. So this is a model that quantifies momentum in an asset. So basically, when you're up above 0, that means there's this positive prevailing momentum, this bias towards the positive side, that price is more easily going to move to the upside than to the downside. Whereas vice versa, if you're below 0, if you're down in the red, it'll be the opposite, where price is going to be easier to flow to the downside than the upside. The momentum is prevailing in the downside, pulling price down along with it. And one of the things I've talked about extensively with this model, and a bear is repeating here, is that one of the things you see in bear markets, a telltale characteristic seen in every asset basically that I've ever looked at the MBI for, this type of pattern plays out in bear markets, where you'll go down deep into the red, you'll pop your head above zero for a little bit, get rejected to the downside after that relief rally fails, and then just the negative momentum bias reasserts itself and you go down further. And if we come over and look at what's been going on here, the exact same pattern's been playing out. Deep into the red, poke above zero, deep into the red, poke above zero, back down into the red. And so what happens from here is going to be really important, right? So I think that this is so far showing no signs of breaking from that bearish pattern. So seeing more downside from here is very reasonable. Now, what we would change my tune on this indicator from that perspective is if we do find a reversal here and start doing this kind of equal oscillation around zero, or at least kind of having zero more in play, because that's what you'll end up actually seeing in these transition periods between a bear market reversing into maybe the beginning of the next bull market, where you start having zero get kind of played with a lot more, kind of danced around a lot more, where the level will come up, kind of come down. You'll start oscillating around zero kind of roughly equally. That is actually a characteristic of a transition between a bear market and a bull market, at least so far as we've seen from past data on other assets. Bitcoin shows that behavior. ETH is showing this shows this behavior in the past. And so that's what I would be looking for here. If we can start oscillating around zero, so if, let's say we do get a pump into the merge, so let's say I'm wrong, that the upside actually does play out. We get this big rally, maybe even break above 2K, and then we start seeing the momentum bias start reasserting itself in the positive. If we can keep that up, kind of oscillating around zero, that actually might be a sign of a transition, a change in overall market dynamics. So we haven't seen that yet, hasn't played out. I still kind of am leaning more towards the bearish scenario here than the bullish kind of coming off the merge. And even if we do get a pump into the merge, I still expect a correction afterwards. It just generally tends to be what happens in these things, that there's a lot of hype leading into it. Then people take a bunch of profits once it happens and price falls off. So that's my base case. Of course, not financial advice. You should make your own determination of what you think is the more likely scenario. But that's just what I'm expecting. And I think the data is not inconsistent with that view, especially with how overextended ETH had gotten in the short term, and with this kind of telltale bearish behavior on the MBI, leaves me concerned in the short term on ETH. Now, the final thing I wanted to talk about was just some more macro considerations as well. And really kind of what I want to get at here is that ETH, like all assets in this bear market, is not operating in a vacuum. Its price action is not untethered from what's going on in the rest of the market. And one of the things that we're seeing right now is that if we look over the Bitcoin chart, Bitcoin's trying to hold kind of this around 20K level as support here, but it's not being able to decisively bounce off of here anytime soon, or it hasn't been able to show the strength to bounce off of here currently. And if Bitcoin were to drop below these levels, capitulate, and start falling down, way down to the downside, and targeting a level closer to maybe something like 13K, which is a level that a lot of people have identified as being their kind of downside target should we lose this current level, kind of coinciding with the 2013 high over here. If Bitcoin were to do something like that, I don't see it being very likely that Ethereum is just going to ignore that and just keep on rocketing to the upside, right? I think Ethereum is going to get caught up in that upheaval in the market, because again, if more kind of issues happen, like the Three Arrows Capital and Celsius debacle bringing us down to this range, if this drop brings more companies into trouble, or more institutions or more players, where they start having to liquidate their more liquid assets like Ethereum and Bitcoin, I think ETH would fall right along with it most likely. And the other thing that we have to keep an eye on as well is what's going on in the stock market, because if you look at the stock market kind of ever since mid-August here, it's been rolling over very heavily. It's quite clear now that this rally had petered out and it's falling off. And there's some macro things that have been happening, like Russia kind of so far indefinitely suspending their gas delivery through one of the major pipelines that fed Europe. That spooked markets like crazy back here on the 2nd, on Friday. The market had a big whipsaw where it kind of opened, really dropped off, kind of rallied back up, and then dropped off again, ending up down on the day, the pretty large negative candle body there. If this continues after Labor Day, right, if the market comes back and we gap down and we just keep crashing down, Again, I don't think that Ethereum is going to be able to just ride that out on its own. I don't think it's just going to ignore that or shrug it off. I think it's probably going to get dragged down also. And frankly, if the stock market really starts to tank, that could be also what would tank Bitcoin below these levels, and that could really pull ETH down with it as well. So really what I wanted to highlight with this is that there are a lot of kind of macro considerations that make me cautious, that make me not really think that a big explosive rally is the base case, is the most likely scenario. Again, not saying it's not impossible, but I think there's just a lot of potential things that could go wrong that would thwart that. So really my overall base case with Ethereum is that, if it threads the needle, if everything lines up for it, if we get the stock market kind of finding a bottom here, get Bitcoin able to hold these levels, then it's possible that the conditions would be much more favorable for the upside. And so then that might be the scenario where maybe, the short-term UDPI has been falling and the long-term UDPI still has room left. That might be the scenario where we start realizing that upside. But, unless all those kind of stars align, I personally think the downside is more likely. And so I personally expect the merge to be a sell the news event. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter for a lot of updates, better indicators, and more over there.